good to cough right away. Good afternoon, everyone. It is 12:59 on this beautiful Friday, the 17th of August. Last trade day. Oh, you know what? It is time to mute myself there. I always let that run so I make sure the audio is working. Clearly, it is. We have a pretty nice run going on today. In fact, if we look at the last, 2 days, we've had a pretty nice run. And if we just look at the candlesticks themselves, there has been some real concerted effort by either flat out retail traders or people who have been following trends pretty closely to continue to short these rallies. But we're seeing that today there is not a lot of that happening right now. Certainly, we have like 6 hours left before the daily candlestick closes on Coinbase's data on TradingView. So we still have some time for this to sell off if it were going to, but we're seeing some pretty strong growth here. And if you remember me talking about this on, somewhere between Monday and yesterday, I was saying that days that we get altcoins catching a huge bid, but Bitcoin is also moving up and so is Ethereum. Those are very, very strong trending days where we're getting a lot of money. Not only are we getting Bitcoin outflows going into the alt market, but we're getting new money into Bitcoin, which is rising its value. So, real quick on CoinMarketCap, we have, if we look, 217 billion market cap now. We were talking earlier this week we were down to 191, and we got up to like 204 when we were talking yesterday, and we've 204 209, but we've really added quite a bit of value on top of our market cap. And Bitcoin's dominance was close to 60%. And now it's gone down to 51%. So that is a good sign that people are leaving it sounds so weird to say, but people are leaving the security of Bitcoin in cryptocurrencies and bringing it into a risk market with the altcoins. So that is a good thing to see. We see a very normal rounded bottom here. What's interesting to watch, and I'm going to pull up an old trade idea I did probably about a month ago today. No, this was in June or July. Let me find it. You might have seen me talk about mirrored foldbacks, and I haven't published any ideas lately. But mirrored foldback, bear with me. Oh, here we go. So this image right here, this is a mirrored foldback. And essentially what I'm talking about in a mirrored foldback is we look at the current price action, and one of the best Gann writers, contemporary, still alive, is Michael Jenkins, and he found this with his teacher. Where the heck is it? Bar pattern? Yeah, that's what I want. Okay. A mirrored foldback is really just where we see prices not repeat the exact price levels, but we see it repeat the near exact swings. We see it do the same swings. And I want it flipped or mirrored, flipped rather. Wait a minute. There we go. So if I were to have this on here like I did back in June, did I say this was published on June 18th? Okay, so like 2 months ago, I wrote about this. And mirrored foldback is basically just this, where we would find some type of trading behavior that is mirrored later on. And I put that on our square of 52 for Bitcoin, and this is the chart I put it on, started it back here. And what's interesting, and I only came back to look at this because somebody on TradingView had commented on it and said something nice. And then I was like, oh yeah, that is kind of cool how it plays out. So here's where this was drawn, and if you can tell, the data, the only data we see is up to June 18th, but if we hit the play button, it will populate to the current chart. All right, and there we are. So if you can see this, we're not looking at the exact price levels to retrace, but we're looking at the same kind of structure and swing. So, you know, if I was using this exact same drawing, I would probably squeeze this in a little bit because it looks like we're moving a little, we're lagging behind this pattern, but maybe not. Really, if we were just looking at this like a Elliott pattern, we would just be looking for a swing up to here, swing here, swing here, swing here, and then a swing here. We'd be looking just for the directional swings. So at our present value area, we're looking for, right now, we're looking for a pretty nice drive higher. That is what we look at in a mirrored foldback. And the principle of a mirrored foldback is, the theory behind it is that there is no randomness in the markets, that they follow a set pattern, that man cannot deviate from them, and that there's nothing that we can do to change the trend of price. And that's how I like to view markets. That's how I like to trade them, and that's always worked for me. I do not believe in randomness in the market. So yeah, as far as what we have going on lately, I mean, we really don't have to say a lot about it. We've had a pretty nice drive throughout the whole week. I mean, we're gonna look at, if we look at the weekly chart, that's a pretty nice looking candlestick right there on the weekly. And what could be setting up here is we have next week's candlestick, hopefully, will have both a higher low and a higher high than this week that we're in right now. And when that happens, we create a bullish pivot in our candlesticks. And when you have those pivots, they play out pretty nicely. So a bearish pivot example would be right here. So it's a 3-bar pattern where you have the outside. So in a bearish pivot, the two outside candlesticks have lower highs and lower lows than the middle one. And so when we look at our current weekly, we have a lower low and a lower high compared to last week's. But as we transition into next week, if we can get a higher low and a higher high compared to this week, then we have set up a really nice bullish pivot in candlesticks, and that would be a very, very positive move and direction that we would see. If we're looking at the weekly chart itself, the fucking bird just ran right into my window. Oh, sorry, pardon my French. That was kind of crazy. So we see this is a pretty bullish divergence we have going on here on the weekly chart with the composite index. We have those. I mean, we have really, and some people may not call it a divergence, but this one is. We have higher lows in both, but you kind of got to pay attention to the pitch here, especially on the weeklies. The higher low here does not match up in a relative measurement to here. So there is a strong case here, and we're in a pretty neutral position in the stochastic RSI. We'll see what the close looks like moving on, but certainly we are forming a pretty nice bullish signal here. On the weekly doesn't close. The weekly candlestick does not close until is it Sunday or Monday? Oh, what was this? This was so we had the 30th of July and then the 6th of August. 30th of July. Yeah, so Monday. It doesn't close until Monday. So if we look at the volume, even though it's Friday, we're getting into the weekend, we can get a crap ton of volume on the weekends. That is not uncommon at all. So if we look at this, there's certainly plenty of activity yet that we could observe happen, and the volume to come in. I mean, the volume's been increasing ever since July. We've actually had a nice growth in volume, and that's actually pretty nice to see. We're getting into the August, late August into October, where we could see a pretty nice general growth in the overall price action, where we're going to be more bullish. I'm not talking we're going to skyrocket every day, but we should see a pretty nice trending up market. I think one of the things that's going to add credence to that is a couple things, and we're just talking fundamentally here, is that Sweden, this is from a news site, Sweden launches fully regulated Bitcoin ETN for U.S. investors. That's kind of like saying it's new. It's not. They've had the NASDAQ in Sweden has had an ETN for Bitcoin for a few years now, I think. I think it even says that in this article. But an ETN is kind of like an ETF. An ETF, like the only difference is like okay, if you trade any forex markets, then you know what contracts for difference are. It's like a contract for difference just follows. It's just a derivative of something. So like a contract for difference for Microsoft is you're just instead of owning the Microsoft share, you're just creating a contract that says, well, I'm going to buy Microsoft at this current value, and then I'm going to sell it later because I think it's more expensive. I'm not an option, but it's just a contract for difference, and there's whole markets for that. In the U.S., our overlords in Mordor on the Potomac River, they know how people should best spend their money, so they create a lot of rules to keep us safe. So we're not allowed to in the United States, we're not allowed to trade in CFDs because mommy and daddy know what's best. You can tell I have a little bit of a issue with that. But an ETNs apparently, those are okay for people to invest in, even though ETNs, they are more like a bond or a CFD, where an ETF actually owns everything in it. So an ETF like the SPY, that's the Spider S&P 500 ETF, that actually owns the companies that make up the S&P 500. It has, a weighted amount of shares that make up the S&P 500, and that's an ETF. So when you buy some of the SPY ETF, you actually are buying something that has an ownership in those companies. An ETN doesn't own those. It's still tracking it's still tracking something that it wants to track. Like an ETN of Bitcoin is just tracking Bitcoin. All right, it's tracking the Bitcoin market. But the thing is if you buy an ETN, and the only way that it stays alive is if the company who owns it is going to last. So if it's a bank and they go bankrupt and you have an ETN of Bitcoin that they manage, you're done. You lose it. You're SOL. So ETNs are a little bit more risky, and there's ETNs. Those are actually, there's some tax benefits to having ETNs versus ETFs. I think that the biggest benefit of an ETN is that you have the entire gain is treated as a capital gain, and it's also deferred. So that's something that's really nice about ETNs. But I don't think anybody, even in equity markets, who are buying ETNs of Bitcoin are doing it because they want to hold on to it a long time. I think they'd be buying it on the spot market, or they're speculating. So anyways, that is something that's great. And why I think this is really important is because this is going to light a fire under the regulators, because you got to think of, in the United States, the regulators are more like referees in the NFL, in the National Football League. Okay, the NFL referees, they don't create the rules. They just enforce the ones that the owners come up with. Okay, so whatever the teams think is a good rule to follow, the referees, they really don't create the new rules, they just enforce them. And the SEC, CFTCA, all those organizations, they're like that. I mean, they're mostly like that. And so what's going to happen now is like all of the big boys are going to be clamoring to the SEC and saying, hey, by the way, we're going to lose a lot of market share in the United States with these ETNs if you don't get off your ass and actually approve some of these ETFs. So, yeah, which they need to do. And the Chicago Board Options Equity, the SIBO ETF, will probably get approved only because they have an existing futures market, and the regulatory agencies are going to look favorable on that, and they'll probably be the first entrants into it. So, yeah, which makes no sense to me why the Winklevoss twins' ETF would have been denied, because they actually have custodianship and all this. It makes more sense for them to have an ETF than anybody else. I mean, it just boggles my mind. But anyways, big deal, thing to look at and be aware of as we're zipping in onto the weekend here. Well, let's just do like a little review from yesterday. So yesterday we talked about identifying laggards in the market, and one of the things we did was we went over trying to find structural differences in our charts. And this is something that you can do on your own, and it's very, very effective, because it's kind of like finding laggards in, like, if you've ever traded stocks before and you're trading like the energy sector, and you notice that, well, for whatever reason, company X is underperforming companies Y and Z. And so if there's really no reason for it other than it's just lagging, then it's just lagging technically, then those generally turn out to be really great short-term buying opportunities. And so when we were looking at our charts yesterday, we looked at, let me go to the 4-hour chart here. So we were looking at Cardano, we looked at Walton Chain, we were looking at ETC, make sure I get that on the 4-hour, and we were looking at maybe EOS, maybe. You know what? ETC 4-hour, no, let's do Krakens. I like Kraken, by the way. All right, so we have 4-hour charts for all of these. No, except this one. And what we were doing, we were trying to identify, okay, when I look at these charts, do any of them look vastly different? And yesterday, the one that looked very different was this top. When you're looking at my screen right now, if you see up here, don't look at that right now. Look at each individual one here. So Cardano's on the upper left, and then on the upper right is Walton Chain. On the lower left is Ethereum Classic, and the lower right is EOS. So these are just examples of looking at charts that are lagging their peers. And so if I'm looking at EOS, Walton Chain, and Kraken looks a lot different than everybody else right now, and that's normal. But Cardano is still a lagging chart. It still is underperforming its peers. It's still underperforming the whole market. And so Cardano is still a very, very great entry for me, because I see no reason why it should not be showing the same market trend as everything else right now. Actually, Litecoin is also a lagging chart. We did talk about that one yesterday. Nano, oh my gosh, I paid off my truck with Nano. No lie. We were talking about Nano for the last couple weeks, and I have, if anybody's been here for the last few weeks, I've been talking about Nano frequently, saying this is the ugliest chart in cryptocurrencies, and for whatever reason, There's no good reason why it is so beaten down. The only good reason I can think of is that it is being it is being driven down, but professionally. That is another way of saying it's being manipulated. Um, I really hate the word manipulation because it's used mostly as an excuse for why you lose money. But so I'll say something is being professionally shorted or professionally pumped. Um, the yeah. Oh, good point. Yep, we do have recorded live sessions, so you can watch the sessions from all the way back. So yes, Nano, something we've been talking about quite a bit, something I've been talking about quite a bit, and I have been holding on to it and adding to it for quite a while, and it has been giving me some really, really, really nice returns. I am very, very thrilled with Nano. I have since I peeled some off yesterday, and I've peeled off a lot more today. I'm gonna get back in on a dip because it's straight up parabolic right now, and I'm just gonna. Nobody ever went broke taking profit early, leaving some on the table, of course. But anyway, so looking at the charts, just looking at them, you don't have to do a whole lot of analysis here. You just have to eyeball it. Okay, well, I see this one's trading down, and then it has this big hook up. This one was trending down, it has a hook up. EOS was trading down, it has a hook up, and Cardano's trading down, and it's starting to hook up, but it still doesn't have a nice pump and a drive higher yet. So Cardano is a laggard in that respect. Now, enough about that. Where do we go from here? We're getting into the weekend. I think we need to take a hard look at what weekends are like, what Fridays are like. We need to be aware that there are going to be it's very easy for prices to slide in a low volume environment. That's why summertime sucks for futures trading. That's why summertime sucks for equities trading. That's why summer sucks all around for trading. It's so the summer is either the best kept secret for trading, or it's the worst thing for trading, because if you love to trade, then you hate the weekends and you hate the summer, and you probably hate holidays too, because you want to be trading. If trading's your career and you've been doing it for a while, you love the summer because you know you're really not going to miss out on much, and you don't have to deal with the stress of choppy and directionless and whipsaw markets. So be aware of that. There are the volume here is a little shaky. We've had a crazy amount of volume pour in on the 14th, and now it's been going down quite a bit on the daily, but prices are moving up. That is not always a good sign. Volume precedes prices, they say. Ethereum, something very nice. Ethereum, so we were looking at this arc and how Ethereum has been trading right up against this arc and and the arc has been acting as a pretty strong support zone. Really, ultimately, as far as the majors, and whenever I say majors, I mean a coin that is listed on Coinbase. I consider that to be a major. That's kind of a throwback to Forex markets majors. By the way, if you have any questions, please ask. There are no bad questions. Technical analysis is a field where you cannot have a very strong opinion and have a belief in something in a direction, because you are going to hurt yourself if you do so. Trading is supposed to be a lonely career because you don't want to let things influence your own analysis, but at the same time, it is very healthy and necessary to share your analysis with others, because you don't know everything. The more I trade, the more I realize I don't know anything, and it's hard to ask questions because we don't want to be embarrassed, and because we all have self-esteem issues. But again, please ask questions. Please ask me to explain something. I want to make sure that I'm getting things across clearly. So if you have questions on why my chart looks like this, how to do these things, just let me know. Okay. I want to look forward here into the future and see what's up ahead, because this is Friday and it is very important to kind of do some weekly analysis and forecasting and seeing what kind of things are in front of us. So this is Bitcoin's chart, and this is with software called Optima. It's by Market Analyst. This is a professional suite of software. There is a trial that you can get, but what are the things that are on here? If you've seen my charts before, you've seen this, but these wavy lines here, these are, don't laugh, these are planets. This wavy line here is this is a harmonic of the longitudinal position of Saturn. These are called Gann planetary lines. Now Gann, one of the things that he did that he used all the time, but he didn't talk about it because he lived in a day and age where you would probably be burned at the stake for saying that you used financial astrology. And financial astrology is there's three things in financial markets. There are three ways to analyze them. There's fundamental analysis, which is lagging. There's technical analysis, which is mostly lagging with some leading, and then financial astrology is all leading. And financial astrology is nothing to do with how you can get that Libra you work with to fall in love with you because you're a Sagittarius or however that shit works. This has nothing to do with horoscopes. This has everything to do with the angular relationships of planets and then correlating the positions of those to what human activity and human behavior was. So very simply, financial astrology is mathematical psychology based on astronomy. They should just call it financial astronomy because astronomy is the science and astrology is a chicken bone magic 8-ball Madame Cleo thing. It's for 1-900 numbers from the 90s. That's what astrology is. But financial astrology is it's pretty damn cool and it's very effective, and I don't think you should discount it because I did, and it's very powerful stuff. Just looking at this is just pure math and science here. This is not anything else other than that. These wavy lines, this is just the longitudinal position of Saturn. Okay, we could look at any market. So the Aussie dollar, if I scroll the way out. So the green line is the actual position of, it's the actual measurement of, and longitudinal position transposed onto a chart. And then the red lines are the divisions between those cycles. Okay, so this is the Australian dollar. And for whatever reason, in the Australian dollar, the planetary line of Saturn is a major source of support and resistance. Don't know why, don't care. I just know that this is a natural level. And why is it wavy? Because this is viewed from what we call geocentric. So we're looking at the planet from the Earth. If we want to get a little more technical, we can go to heliocentric, where we see it, where we would be looking at the longitudinal position from the sun. Okay, fun stuff. Anyways, that is what we have right there. But looking at Bitcoin, I need to know, okay, well, what is going on with Bitcoin? What is the operating conditions that we see coming up? So on the long term here, we have, this is the sun opposite Pluto. All right. Now, this has nothing to do, again, with like magical pixie dust and unicorns. This is just, we are just taking the angular relationships of planets and correlating them to past price action behavior. Okay, so if I go to, this is called an ephemeris, but here it is. Here's our solar system, and here's the rotation of the planets around the Earth, or you can do it by the sun, and they're separated by 30-degree increments, which are called, in astrology, they're called houses. So in other words, if you say something's in Taurus, that means it's in between 30 and 60 degrees. That's all it means. That is all it means. It doesn't mean anything more than that. That's just all it means. And so when we look at Bitcoin's chart and we see that we were at this sun opposite Pluto, for whatever reason, the sun opposite Pluto, whenever that happens, it's this aqua vertical bar. If we go back in time, it is usually at or near an important swing high or low. Or we just want to know what happens in price action in its direction and in the momentum. And it only shows up once a year. Okay. All right. And this green box, this is just nothing. Okay. That's all it is. So there are a lot of relationships associated with these as they show up in time. So, I was talking about this back on with our Forex Lens customers. We've gone over this stuff plenty of times. I was talking about this here back in July, and the behavior of this is to see prices rally from this zone. And that is what we observed happening. We had some sell-off, but we have this bottoming forming. And in fact, this looks like a little bit of an inverse head and shoulders pattern, doesn't it? Yes. Does that show up very well on the... let's use this one. What the hell? Whoa. What the heck happened there? That's awesome. Oh, my Aussie dollar longs are doing good. So my pound positions and my euro. Sorry, I didn't catch. What the? I just got to look at that real quick. When did that catch? Shit. That's awesome. End of day, end of week. Okay, this is real quick. This is a good example of why they say, well, at least in futures trading, they say amateurs trade the open, experts trade the close. In foreign currencies, probably the most important time that you want to watch a market and get an idea where it may move. Then the next week is look at whatever happens after 11 a.m. Central Standard Time or 12 p.m. Eastern Time. Anytime after that, if you catch some type of big pump in one direction, that's something to pay attention to. So let's look at back to Bitcoin on the daily chart. Actually, let's look at it on the weekly. Yes, there are... Actually, I'll do a cleaner chart here. We do have a head and shoulders probability here. Now, in the chartered market technicians... Okay, when you guys make these sessions private, will they be included in the Forex Lens membership? Yes. Yeah, Mohammed... Okay, yep. Okay, the other guys actually answered that already. Yeah. Because this is not going to be free forever. This is going to be a paid and private thing soon. But, we've been letting it go free because, it's... I mean, listen. I really hate services like the ones we provide. Because they're really... Most of them are just horrible. And they're crap. And maybe I am too, but... I'm an educator at heart, and I want to make sure that there is, stuff out there that is going to help people, and so, offering this for free for a while, I think lets people assess whether whether what I talk about is something that's going to be valuable to you or not. But I mean, there's a lot of services where where they don't even give you a trial. You just have to throw down a whole crap ton. And there are some places. I think this is just criminal, but there are some places that charge like $500 a month for something like this. It's just criminal. Most of the education stuff out there that you have to pay for, it is just stuff ran by failed traders who now are looking to make a buck off of some future failed traders, and that is shameful. Really irritates me. Back to this, but in the Chartered Market Technicians material, they bring up a gentleman named Bolkowski. He's got a website. I don't remember where it's at though, but he rates patterns in candlesticks and in just regular patterns in general. And the one that he says is the most profitable are the head and shoulders formations. And they're the most profitable for they're not the most profitable, but they have the highest they have the highest positive expectancy to yield a positive trade. And the reason that head and shoulders patterns, I don't like to talk about them a lot because they seem kind of like a duh thing to talk about. But regular head and shoulders, inverse head and shoulders, they are very, very powerful because they are a series of triangles. And it's not so much the head and shoulders pattern that's important. It's the triangles that make up the head and shoulders pattern. And there's a whole lot of other things that go in it too. But the issue with the head and shoulders pattern is that while it is a common pattern that shows up and one that is proven to be very profitable, it is also one of the most rejected patterns. So professionals, funds, experienced traders, they know that people will try to trade a head and shoulders pattern before it's complete. All right? It is very dangerous to draw something like this on your chart and then try to trade with it, and then no matter how low this goes, think it'll come back over here. The head and shoulders pattern is something that should only be traded after this line. They call it the neckline. After that has been broken, okay? Until price has traded above it, has broken this line, you do not want to trade this because you could get trapped. And there's also, and I'm like this too, there's also a lot of false breaks of head and shoulders. So what you really want to do, this is up to you, but what I do when I see a head and shoulders is I want to see it break out and come back down, and I want it to test that neckline again. And then I want that test to hold as support, and then once that happens, then I'll enter. But to me, I don't like to risk a lot of times getting in on the initial breakout, but a lot of people do, and that's fine. That's just it's just personal preference. But certainly, trading a head and shoulders pattern where you are saying, "Oh well, this is all we have to do is trade this way," and the pattern shows up. This is kind of like chasing straights or flushes in poker. You'll get burned. So if you see a head and shoulders pattern, wait for it. But then somebody may ask, well, John, if it has a high chance to form already, and you're trading above the neckline, look at all that profit you missed. It's like, well, I mean, you could think like that, but that's where your risk and reward comes in. Now, you have a higher chance of losing money entering into a head and shoulders trade here than you do of waiting till you wait here. Okay. Try not to think of the profit you would have missed on the formation. Just think of the risk associated with getting into it before it forms. That's what you should be thinking. So very simple rules. But as we're getting into the weekend, there's a lot of things to pay attention to. Looking at Bitcoin as a whole, so the upside pressure, we actually have another breakout zone right in front of us. If I scroll out here and I observe where we're currently resting, there is a breakout zone above us. That's above the 6600 value area. But right above us in here is where I'm circling my mouse, is the 3/8 major harmonic. That is a very important support and resistance level. Major harmonic price levels are very, very difficult for price to cross above or below. more than likely we'll and actually a good example of that is this past price action here. When we saw price trade up, it got rejected at this inner harmonic. This is a red line on any of my charts indicates the strongest area of reversal. So but the behavior of price traveling beyond the major harmonic price level, and then when it goes past the first and then we get to the second, almost every single time it will retrace back down to the major harmonic. In this case, it went all the way back down here. So if this holds as a source of big resistance, I don't know, but we have two intersections of Gann angles in the square of 144, and that's what this geometric chart is. It's a square of 144, and when price target for reentry on Nano, I'll get that actually. So I'm looking to kind of go into some true USD or Tether the closer we get to 75.62. Depending on certainly between the now and the weekend and Monday, if we get too close to these angles, we're going to get a lot of selling pressure. But otherwise, we have a pretty wide open space here to move higher, and that is actually the direction we should go, because the rule of angles that Gann wrote about is that when price breaks an angle, I know this, I'm repeating this for some of you, but Gann had this when you traded in his squares in his market geometry, the rule of angles said that when price breaks an angle, it'll move to test the next angle. So, and we see that repeated all over. I mean, look at this chart. We can see that these angles, that like they trade in these channels almost, and when they break, they retest and they fail, they will move to test the next one. So it gives you a really, I don't know if it's clear or how accurate you want to call it, but if I don't know how I traded without using market geometry before, because it always frustrated me to figure out, well, why are these wicks forming here? Why is there like a congestion of upwards moving price here? I mean, market geometry tells you, kind of gives you a I don't know. I guess this is like trying to find. I think trading without market geometry for me is like trying to drive without Google Maps in my glasses. If I want to go somewhere I've never been before, I might as well like try. To me, trading without market geometry is kind of like that, because when I learned how to apply market geometry, everything else that I learned about technical analysis made a lot more sense. It's like this is, and some people don't do this. That's fine. That's all. That's okay. But okay, Nano reentry. Here's the deal. Good. Thank you for bringing this up, because I was going to bring it up if nobody else was. If I zoom out here, this line right here is the 45-degree line. There's two 45-degree lines in this square. Let me bring this down to the daily, actually. Oops. All right. So if we see the middle of the square, we see that this 45-degree line, the upwards sloping 45-degree angle is your bullish trading line. So if price is above the 45-degree angle inside any square, that is considered to be in a bullish trend. If it is trading below that 45, it's considered pretty neutral if it's still above here. If price is trading below the downward slanting 45, you are in a very bearish move. So Nano has been beaten up and kicked down and beaten up and kicked down and just been annihilated. And it has reached this is just sexy that we found the bounce happened right on the midway point of this square. And it's not even like actually, well, you know what? I shouldn't say that. It's a little bit off there. There we go. So that price value area is 1327. If you're just using dynamic forms of support and resistance, you wouldn't have been able to trade that level prior to it even forming the candlestick. But those of us who have learned how to use and form squared ranges, we know where to look for those support and resistance zones on longer term trends. We know where to find a swing in a market. As far as a pullback, this is getting to be tricky because we are actually showing a pretty damn bullish. This is a massive, massive volume. This is huge. This is the, what is this? The fourth highest daily volume bar in the entire history of Nano on Binance. This is significant. It's the volume component here is something that can't be ignored because I don't know if this is something you want to trade against. It's right up against this 45 and it's showing some pressure. But the thing is that Nano has had some really, let's look at the volume bars here. This is all screaming accumulation. This is all screaming there, you know, until I see a whole bunch of really large bearish bars on the hourly, that would be signs of distribution. So far, that is not looking like it's happening. So if we get a throwback or pullback, if we get pulled back down to this angle, that's where I'm gonna get in on a retracement. I think this one's too close. We'd come back down to here. So anything below you know, around 2240 all the way down to 1894. That is where I'd be wanting to come back in for long on Nano because I've since peeled off profit over here. However, if we break out, the other scenario is, because we haven't had a pullback yet, is if Nano does do a breakout above the 45, it will be pretty huge. It'll be a pretty big drive higher. And the thing is I don't want to trade this breakout because I don't know. I want to say I'm not that I'm risk averse, but I'm, you know, we trade in cryptos. This is most speculative markets. I don't know if there is such a thing as being risk averse here, but the thing with the Nano trade here being up against this 45 and it's just showing a lot of strength is that the breakout could move up and sustain and just stay there, not retrace. But experience has taught me no matter what that if we've had a pretty sustained move over the last few days. We've gotten pretty parabolic here on the hourly. But if we do get another drive higher, then whatever the breakout is above here, however far it goes, if it pulls back down to the 45 again, that's also where I want to re-enter. So I'm not interested in getting in on the initial breakout of the 45 here. I am interested in getting in on any of the pullbacks and the retests. So in that case, Luis, it would be the 2898 or just this value zone. 2898 would be that value area that I would be looking at to entertain another long trade. You know, one of the things that you guys can do if you're trying to figure out what is something to look at is I'm always impressed by TradingView. TradingView has a crypto screener on the bottom left, and cryptos are so new, the market is so young that you can do things like this very easily. It doesn't really work in Forex or in equity markets because equity markets are so correlated together. But in cryptos, it works really well. I like to check out the monthly performance and find which one is doing horrible, and then see what their weekly is and all that. So I like to just look at the BTC, or actually TradingView converts things into US dollars a lot. So look for the US dollar pair. So if I'm looking at the monthly performance minus 74%, that is DMT, then I like to look at the chart and probably make sure it's on auto scale. And it's on Bittrex, but I want to see, what kind of volume does it have? Yeah, not interested in touching that. There's almost no volume. QKC, it's got some pretty nice volume, and it's down 67% over the month. You know, or some, maybe you want to look at, maybe I'll look at what is doing the worst over the weekly time period. So like this week, this would be good to look at because there's probably something that has a lot of interest and is traded a lot that is doing horrible right now compared to everybody else. So, if we look anything in this 20% range that has had Z Classic, for example, Z Classic gets a lot of volume. Z Classic is a lagging chart. Tube, what the hell is BitTube? No. And you also want to kind of think of find the coins that are listed on more than one exchange. So if they're on Bittrex and Binance, or something's on, this. If it has a lot, that volume matters, but volume on two different exchanges. So MLN, this is a lagging chart. I am actually going to give myself a little note to actually look at that. I have a little note there to look at MLN. On the weekly, it's performing yucky against everybody else. BitTube, up token, wherever the heck that is. HMQ, I've actually traded this quite a bit. Salt is one of the originals. Salt lagging chart, CND, that shouldn't even be a thing. Siren token. Let's see what else we got here on the weekly. Naga, Augur, yeah, rep. Ooh, that's actually a really pretty chart. Yeah, so there's all sorts of different things to take a look at and compare them on the weekly. I mean, even Bitcoin. Ooh, Wax actually is a. Yeah, 46% down on the month. 14%. I mean, it's really underperforming on all of those metrics. Yeah. I like the Wax trade. I think Wax is on Binance and Bittrex too, I think. Bittrex. Is it not on Binance? Maybe it's not on Binance, but it's on Bitfinex, Bittrex, Bitthumb. Wax, it's a nice chart. Yeah. Oh, we do have to check out one thing that we always like to look at. I always like to look at. I want to know about the moon phases coming up because they play a big role in things. So the next moon phase doesn't come up until the 26th. So that's a little while yet. There's not a correlative apogee-perigee on that date. Not seeing a lot of other issues with the time cycles here. This is looking more like just continuing to a trend here. There will be a square of price and time if we were to get down there at the 4,000 value area. That'd be kind of sexy to see. But yeah, anyways, any questions before we kind of close out things here? It's very easy to want to be cautious still because this has been a long. I mean, guys. And actually, maybe I'll close out with this as saying that there's a lot of services like this that are in any market, but the ones that are in the crypto markets, I mean, I'm sure you've all probably found is that when the market is healthy, there's a crap ton of people out there willing to tell you everything they know. When it's going up like 300%, everybody and their dog has a YouTube channel and a signal site ready to go for you. But then, when we got to those all-time highs and it faded down, There's not a lot of those people around anymore. Like they're just fair weather fans. You know, I at Forex Lens we've had some rough trade weeks before, but I'm still going to be there. I mean, you're not going to make it as a trader if you like just take your ball home every time you lose. And the thing is though is that if you cannot stomach a long-term bear market, you might as well just I mean don't even bother trading. It's easy to be a trader when things are going well for you. It's easy to be a trader when a market is bullish. But that doesn't teach you anything. That doesn't make you better. Like all of the people who first got into trading cryptocurrencies when Bitcoin was worth like $7,000, and then when it went up all the way up to 20,000, I feel bad for them because they only knew a stupidly pumped up market. Okay, but those of us who have been trading for a while, or certainly any of you who have been trying to trade current cryptocurrencies or have continued to read about it, keep up on them despite the bear market, the rest of your trading is going to be so easy. I have never seen such a prolonged, ugly, drawn out market like Bitcoin has had in 2018. And I'm happy that I've gone through it because it makes everything else the worse. The worse the bear market you go through and you come out of, the better your trading is going to be because you'll always compare it to whatever that worst bear market was, and nothing will be as bad as that, or you'll have a better perspective. I always say, like, I grew up in a small town in Minnesota. I was raised a Vikings fan, and I think that's why I became a profitable trader. I don't want to say good or successful. Because there's a lot of good and successful traders that work for big funds that actually end up losing their company money or their customers' money, and they still get a paycheck. So that's successful. I'm profitable. I trade on. This is how I make my living. But I mean, what I'm trying to say is a Vikings fan, you are raised to be a realistic pessimist. Okay, like you always think the worst is going to happen, and whenever anything good does happen, you're very suspicious of it. Like how much longer am I going to feel good until somebody rips my heart out? Okay, so being raised a Vikings fan maybe gave me a heads up. But that's how you have to be as a trader. You have to be very, very cautious about your emotions, especially when you feel good. Anyways, we should have an interesting weekend probably moving forward. I don't know if we're going to range trade or not, but be careful either way because when things trend over the weekend, they tend to trend in one direction, and they're usually pretty significant drives, regardless of whatever volume is participating. So, there's a ton of volume that's come in this week, and at the end of last week, I mean, we just see a huge amount of volume. When any market, whenever you see prices in a downtrend and you're at or near an important swing low, and you see massive volume bars, that is a very good sign that you've probably reached a bottom. And looking just at Ethereum's chart, this is a very, very positive, bullish looking sign. If we look at just Bitcoin's, same thing. Big volume bars have come in over the last couple weeks. And yeah, just be wary. I'm definitely in the... Speaking of head and shoulders, there's definitely a head and shoulders that could play out here, but I'm definitely in the buy the pullback mode at the moment because we've had really good volume participation. Anyways, I hope you guys had a good trade week. Have a safe weekend, Forex Lens customers. I will see you not tomorrow. I'll see you Monday morning at 6:30, and for the rest of you, I will see you at the same time, 1300 Central Standard Time, for the crypto markets. Be careful. Trade well, trade smart, don't trade emotional, and have a safe weekend. I'll talk with you next week. Bye-bye.